I know there are all kinds of flashy things going on right now between the indictment and Xi Jinping, and I'm not going to sit here and tell you, well, those things aren't really important. Let's focus on what matters. No, those things are very, very important. But also you and your life, that's really important too. Your finances are really important too. Are we going to go into a recession, a depression? What's happening with interest rates? What's happening with inflation? These are things that matter a lot. They matter a lot to every person, not just political people. Everybody goes out to buy eggs. Are you still going to be able to afford to do so next year? And what's the Fed about to do with these rates? Let's dig into it, man. It's time to talk about it. So what is going to happen? I don't know. Let's ask John. Joining us now, John Carney, Breitbart News, finance man, always keeping us educated. All right, John. Look, I have an opinion that they have to raise the rates because I'm worried about inflation. But my opinion doesn't matter. We need your opinion. Are they going to raise the rates? Are they going to drop the rates? Are they going to leave it where it is? What's coming tomorrow, John?
Well, the first thing to note is this is the most uncertain we've been about any Fed meeting in over at least years, probably. We always knew that they were going to hike the last few meetings. This time, not only do we not know how much they're going to hike by, we don't know if they're going to hike at all. They may just pause, or some people have urged them to cut rates. I think the cutting rates is off the table. I don't expect that to happen. A pause is possible, but I think the most likely and the right thing for them to do is to go ahead and raise rates at this meeting. So I think we're looking at a 25 basis point, 1/4 percentage point hike tomorrow, and not a cut. And I don't think they've seen enough panic to make them actually want to pause.
Okay, I agree with you that I think it's the right thing to do, but there are a lot of people out there very concerned, understandably, about interest rates going up. Can you explain to those people why it's a good thing that interest rates go up?
Right. Well, we have inflation that's way too high. We need higher interest rates in order to bring down inflation. A lot of people thought that the progress we made already would have been enough to stamp out inflation. But what we've learned is actually inflation is a lot more persistent. And when you look at underlying measures of inflation, we barely made any progress for several months now against inflation. So the Fed does need to continue raising. It does need to keep an eye on the banking sector and make sure it's not destabilizing. But I think there's actually an argument to say that if the Fed paused or even cut rates, that might send the wrong signal. Raising rates right now sends the signal, look, the banking system's stable. We can get through this. There's a couple banks that are in trouble. If they actually say, we have to give up the fight against inflation, or at least put it on pause for now, people could read into that the idea that they're seeing something much worse in the banking sector than we know about. So their pause could actually cause more panic.
On that note, here was Janet Yellen.
Our intervention was necessary to protect the broader U.S. banking system, and similar actions could be warranted if smaller institutions suffered deposit runs that pose the risk of contagion. While we don't yet have all the details about the collapse of the two banks, we do know that the recent developments are very different than those of the global financial crisis.
John, here's what concerns me. The banks hit the panic button because banks have made a lot of very stupid decisions very clearly. Even they acted like they didn't know interest rates were going to go up. And so banks start panicking. Federal government steps in, starts in backing all these deposits on the banks. And off this panic, is the Fed now going to not raise rates enough because the banks hit the panic? It seems like a damned if we do, damned if we don't situation right here, made worse by the Fed bailouts and the dumbness of the banks.
Yeah, no, that's right. The dumbness of the banks is threatening to saddle us with inflation for longer if the Fed has to back away from this. I actually don't think that would work, by the way, because higher inflation also pushes down the value of the long-term bonds these banks hold. So even if the Fed attempted to say, okay, we can't raise rates because it's hurting the securities portfolios of the banks, I don't think that works. I think then you get higher inflation expectations, which pushes down the values of those bonds even more. And so the Fed should keep on going. If they pause, I don't think that's a complete disaster, but I do think we'll look back on it a year from now when inflation will be higher than it would have been and say that was a mistake. And I think the Fed has made too many mistakes. They should stop making mistakes, stop underestimating what's going on with inflation, and definitely do a quarter of a point. I would have preferred if they do 50, but I guess, the instability of the banks has taken that off the table altogether.
Okay, so the best we can hope for is a quarter of a point. Now, I'm asking this not as some idiot on TV, just as an American citizen. Is the value of my dollar going to continue to go down for the foreseeable future? And if so, how long are we talking here, John? 10 years from now, is my dollar going to be worth even less than it is today? Is this a year? When are we going to stop this?
Remember, it never stops. The dollar is always worth less year after year. The question is, how fast does the dollar lose its value? Right now, we're losing value at about 7 cents on the dollar a year. That's way too fast. So the question is, how long does the too fast last? And the answer is probably at least another year, that we're not going to bring inflation down to what the Fed looks as a desirable level of inflation, 2%, until sometime in 2024 at best.
John, to ask a really stupid question, but one I really genuinely want to know, why is it written down? Why is it a thing that the value of my dollar has to go down at all? Is that just basic economics? So I can never be in a financial situation, an economic system where the value of my money goes up?
Yeah, you know what? This is a controversial opinion, but it's pretty much agreed to by all the central banks in the world that you should have around 2% inflation. The idea has to do with some economic ideas about how growth really works. I'm not sure those theories are right. I share with you some skepticism about the fact that our central bank should always be aiming for sub-inflation. But look, on the side of the inflationists, when we had very low inflation after the financial crisis of 2008, we actually had very low employment growth and persistently high unemployment. So maybe we do need some inflation to keep things going. I'm not sure why that would be, frankly, but that's how, the 10 years previous to our pandemic support their argument in this case.
Support the First TV today and get instant access to exclusive specials like Who is Ron DeSantis, the history of FBI scandals, and America's worst presidents. Visit thefirsttv.com/support or download the First TV app to become a supporter and start watching today.